Hi there, I'm Ishbia, President and CEO of UWM, and this is 3 points. First point, interest rates. So we all know what's happened recently. At a press conference on December 13th, the Fed Reserve basically left interest rates unchanged. But Jerome Powell said the historic tightening of monetary policy is likely over as inflation falls faster than expected. And with a discussion of cuts in borrowing costs coming into the view. So basically what he said is, I think rates could drop and we could lower rates 3 or maybe even 4 times in 2024. This changed the market's perspective. People think, could he still raise it? Are they going to keep it flat? What's going on? He said the inflation's coming down. They're starting to see things happen in a positive way. And so we all saw the immediate reaction. Rates dropped right away. It's almost at a refi boom level, but not quite there. It's getting close. But it's definitely at a sparking of opportunity for purchases, and people are starting to sell houses now and buy houses. It's been a huge thing. And so this big news from the Fed has made it so that now people know that 2024 is going to be an amazing year, an opportunity. So rates dropping, he does not clearly say when, but by the way, it's a huge marketing thing. By them just saying that, how many borrowers reached out and called their loan officer and talked to their loan officer about it? So it's a great talking point, great opportunity, and seeing that inflation has eased. And the Fed is basically saying, hey, I see rate cuts coming in 2024. That has changed the outlook for the mortgage industry, and the opportunity is coming. And so hopefully everyone sees that change and is ready to dominate and take advantage of it. Second point, credit report costs. So the credit report fees have gone up significantly, and it's consistently happening again. It's hurting consumers across the industry, changing the way the mortgage process is going, where basically, people are now having to actually collect money up front for credit reports. The money is outrageous right now from where it used to be. Now, what does this mean, and what's FHFA going to do about it? They pushed to reform credit reporting, was intended to reduce the cost of originating mortgage. However, since they announced it, it's gone up astronomically. What are we going to do to stop it? Because consumers are being hurt, mortgage lenders are being hurt, everyone's being hurt except for the credit companies. The credit report companies, everyone's making money. Everyone's making money across the board on those things. They've raised prices, completely arbitrary. It's almost like working for a retail company. You only have one option. What are you going to do about it? You only can use their price that they give you, and it's just you just got to deal with it. There's really no option for any of us. And so it's interesting to see. We'll see if FHFA steps in, because it's just kind of gone astronomical, and it's hurting consumers. It's affecting things in the mortgage process, making the process not as fast, not as easy, and definitely not as cheap. And even seeing how they changed soft pulls because people are doing that. It's just interesting to see how this is all evolved. And so we're going to see what FHFA does if they step in and do something. But credit report costs are up. How do you pivot, maneuver your business to make sure you take care of consumers and still can do a lot of loans and pull credit report? It's going to be interesting to see how it all shakes out in 24, 25, and beyond. Third point. Originations expected to increase in 2024. So obviously we talked about the Fed Reserve, announcing that they won't be increasing rates. That's one thing. But I said even a couple months ago that we expect purchase, and the market expects purchase to be up regardless if rates went down. And now with rates going down, purchase is going to be up even more. So we thought 10%, but now it looks like it could be up 18, 20, 25% purchase, because people are going to sell their houses and people are going to be moving, and people that were on the fence are now jumping off the fence. And then of course refis are coming back, where a lot of places are 85, 90% purchase. Maybe you go down to 70% purchase. If you keep doing the same amount of purchases, refis are going to be there as well. So it's going to be an interesting opportunity to understand and take advantage. More business in 24. We went through 2 tough years. 22 and 23 are tougher years in the industry, and now 24 is going to come back hopefully strong and positive. A lot of chief economists, a lot of people are saying rates are going to be in the low 6s, high 5s. This is going to happen. This opportunity is there. Are you prepared for it? Originations are going up in 2024. Get ready, be prepared, and be ready to dominate. Thanks for joining me. I'm Ishbia, President and CEO of UWM, and that was 3 points.